We've seen a good day for the Australian share market with fresh decade highs. We are seeing the telecom sector outperforming, as is the healthcare and the tech space. And of course, with the market reaching fresh decade highs, we've seen some stocks on the market reaching all-time record highs, including TPG, Washington Soul Patts, Brickworks, Cochlear, Corporate Travel, Fisher & Paykel, Macquarie Group, ResMed and Xero, just to name a few. Economic data, though, has been disappointing, with capex for the June quarter disappointing the market. We have seen the Aussie dollar dropping on the back of those numbers, with new business investment down 2.5% in the June quarter. Meanwhile, on the market, TPG in focus as it announces a merger of equals with Vodafone. The two companies have complementary businesses, with TPG looking after the broadband internet area and Vodafone in the mobile space. Together, they have 27,000 kilometres of fibre networks, a mobile network with over 5,000 sites, and a combined company has, of course, an increased ability to invest in the 5G network. So the advantages of combining the network are the combined investment into 5G, synergies from removing duplication. Of course, Hutchison Australia owns 50% of Vodafone Hutchison, so that stock is up by 44% today, and TPG up by 15% on the market. Westpac has announced a rate rise. We have seen Westpac increasing rates by 14 basis points, repricing its mortgage book. All eyes on the other banks to see whether we are going to see them follow suit, but it should increase earnings and boost earnings for Westpac by around about 2 to 4%, being supportive in the near term. And of course, reporting season coming to a close. Looking at the top 200, and in the month of August, we've seen 50 stocks falling and the rest 150 stocks rising, and of course the market ending at a decade high. Growth was a standout, and that meant some of the most expensive names on our market became more expensive, including WiseTech, Appen, as well as Altium, which all gained around about 40%, dominating the best stress lists this earnings season. Meanwhile, the worst being Speedcast as well as Pact Group. Having a look at some of the best and worst, and we have seen healthcare a standout this reporting season. We've also seen gaming stocks doing well on the back of a revival in VIP revenue and turnover, but negative rising raw material costs impacting on stocks like Pact Group, Ansell, Aurora, as well as Amcor. But all up, it looks like we're going to finish off the month at fresh decade highs.